Hey everyone, me Kevin here. This video is brought to you by life insurance you can get in as little as 5 minutes. Go to metkevin.com/life or click the link down below to get life insurance in as little as 5 minutes. All you have to do is go to metkevin.com/life, Apple or Android, pay for it, and folks, you're on your way to having life insurance. For now though, let's talk about the stressful roller coaster that is cryptocurrency, or the beautiful buy the dip opportunities that you get with cryptocurrency. In this video, I'm going to break down what I think caused today's crash in cryptocurrency, and I'm going to talk about what this means for the potential future of crypto and catalysts that we have coming up. So let's first get started. There's a lot of talk, specifically FUD, fear, uncertainty, and doubt, over the fact that, oh no, Bitcoin was rolled out as a legal tender in El Salvador and was met with anger from the population, that 70 to 80% of individuals in El Salvador don't want this Bitcoin as a currency, and that because of a botched technical rollout, Bitcoin was sold off, and that's why Bitcoin was down 10 to 17% today as sort of a protest to, oh no, the potential failure of Bitcoin. Well, in my opinion, this literally has nothing to do with the fall of cryptocurrency prices. In fact, we have to think about it this way. Most cryptos fell on average about 10% today. The broader crypto market lost about $200 billion of market cap worldwide. $200 billion worldwide is not an impact that we get from El Salvador having a botched rollout of Bitcoin. Given the fact that El Salvador's total GDP for a year is 1/10, okay, maybe it's like 1/9 of that. It's $27 billion. I don't think El Salvador's economy has the power to eradicate $200 billion of market cap from the crypto ecosystem and crypto economy. So I'm not so worried about El Salvador. I think there's something else that happened here, and it's worth paying attention to because it might be a reason to buy the dip, unless of course you listen to Bloomberg. Let's start with that. Let's start with Bloomberg. Bloomberg threw out this piece of technical analysis today. Bloomberg suggested that Bitcoin has now completed a key day reversal, paving the way for a deeper correction. All right, so let's break this apart. So I've made the claim that El Salvador is not what led crypto to fall. Crypto fell anyway, we're going to talk about why, but now we have Bloomberg and the Bloomberg terminal arguing that, wait a minute, is this the potential path back down to $43,000 for Bitcoin? We'll analyze that when we go to the charts in just a moment. But take a look at their argument here. Believe them or not, take a look at this. A key day reversal is essentially when you hit a new high, which we did. This is a new high right here, following yesterday's high right here. So yesterday's high is kind of right here at the little tip there, and today's high is right here. That's a new recent high. But in the same day right here, we hit a new high and ended up closing below the low of yesterday's price. And this right here is a potential indicator per Bloomberg of a reversal in the crypto trend going up and a potential indicator of more pain to come. This is really interesting because we've got a very big catalyst coming up on September, wait for it, is it the 13th or the 14th? The 14th. The September 14th, we get the CPI data release coming up. Now, I know that many people do not believe the CPI. That's okay. But we've got to know that over 70% of cryptocurrency trading is done by institutions. And institutions read the CPI. They trade based on what CPI does. We know that most activity is not people like you and me wanting to buy and hodl or buy and then sell once we make a nice gain. It's day trading institutions, folks taking advantage with their computers of micro price discrepancies and fluctuations between lows and highs. This is why cryptocurrencies so clearly follow perfect TA trends, which, because crypto tends to follow TA trends so well, it is worth paying a little bit, not a lot. I'm not putting too much credit on this. It is worth paying a little bit of homage to the potential warning of what the Bloomberg terminal tells us here. Now, I generally don't believe the terminal here when it comes to their cryptocurrency expectations, but let me put it this way. Last month, I posted a video saying, hey, we are at some of the lowest levels of leverage. And don't get me wrong, still leverage in the system, but we're at some of the lowest levels of crypto leverage that we have seen in the last 12 months, which is incredible because we've had this crazy run-up of leverage. We've had this collapse of leverage following the sell-offs around April 12th and May 13th that led cryptocurrencies to fall throughout the summer. We've seen a lot of leverage come down. We've slowly started seeing leverage come back in. And when we saw this inflection point in leverage, in fairness, shout out to Bloomberg, they mentioned while Ethereum was like $3,100, hey, we could actually see a lot of gains coming to cryptocurrencies because we still haven't seen the leverage button really turn on in big levels yet. We're still at relatively small levels of leverage. And that, in Bloomberg's opinion, led them to believe that Bitcoin actually has a path to 100,000, which is really interesting. So they were kind of right on about that. So we also know that cryptocurrencies follow TA trends, and this is an interesting piece of TA that could potentially set the stage for a reversal. It makes sense. We've had a pretty good last 30 days here in crypto, and we're going to go to the charts in just a moment. But we've got to look at what I think actually led to potentially the start of this reversal today. Maybe somebody saw some of these indicators and what I believe really accelerated the decline that had happened today. And the big thing, in my opinion, that really added fuel to the fire today was of the leverage we had, we got a lot of liquidations today. So take a look at this. Quick note, before we do that, I just want to take a quick moment to mention that, yes, I have had so many requests from people asking me to not raise the prices yet of the courses because they're waiting to see what happens with my election. They're waiting to buy my programs to see, am I going to be governor of California or not? And so if I lose, I say they want to buy the courses, which is kind of a really interesting place I'm put in. But anyway, what I've done is I've extended the coupon code for Jack's birthday to September 24th. That gives us time after the election for you to use that same pricing. So check that out down below. You get all of my buy-sell alerts. So if crypto's falling and I'm buying, you'll get an alert, just like we did this morning when Cardano, Ethereum, and Bitcoin were plummeting. Check that out. Link down below, Stocks and Psychology of Money, and we'll see you there. So take a look at this. This is BYBT, B-Y-B-T, and they give you a section where you can look up total liquidations for cryptocurrencies, all of them, where you could sort them down by time, by symbol, by exchange, whatever. And take a look at this. These are sort of the regular cryptocurrency fluctuations here of liquidations. These larger lines over here mean how many liquidations we had. And so on a normal day, you might see somewhere between $40 to $400 million worth of cryptocurrency liquidations, essentially. And this right here goes back to June. So you're kind of seeing cryptocurrencies at low prices here. You can see when we have these peaks over here, sometimes you get prices that fall down with these. You get liquidations here at the peak. All of a sudden, you get this acceleration of a decline, which the timing of which usually the liquidations help you see the chart go down, right? So all of a sudden you see a decline of say 15, 20%. Some folks who are heavily leveraged start getting liquidated, and it sort of sets off a chain reaction. So take a look at this here. On the right side, look at this liquidation chain right here. A massive set of liquidations of long positions. Around almost $3.25 billion of Bitcoin liquidations. And when we zoom in to see the time frame of this, look at this. Let's go into the 1 minute chart here. We can really zoom into this. The 1 minute chart here, we see, oh, here's a big bar, the evening around 8 p.m. California time on September 7th. Okay, somebody got liquidated. Some people got liquidated to the tune of somewhere around $63 million. Nobody cares about that, $63 million. We're not even going to notice that. We got to zoom out a little bit more to 8 a.m. right here in the span of one bar. In other words, a 30-minute time frame right here. We had 1.82 billion in liquidations, preceded by 700 million and 131 million, and followed by another 38 million. So all of a sudden, within the span right here of 30 minutes, particularly between 8:06 a.m. California time and 8:11, we had a massive amounts of crypto liquidations. Remember what a crypto liquidation is. A crypto liquidation is when prices fall and all of a sudden brokers wake up in the morning and they're like, hey, it's 8 a.m., pay up. Oh, you didn't fund. Computer automatically liquidates you at a certain time. Usually what happens is if prices fall to, let's say, I'm just going to make a quick example, okay? Let's say you have $100 in Bitcoin and you borrowed $100 against it. Well, you're not going to be able to borrow $100. So let's do a better analogy. Let's say you have $100 in crypto and they let you borrow 50. And if crypto goes to $80, you get a warning letter that's like, hey, you need to bring in some more money. Like now you're in this place where it's too risky. We don't want to lose money. And if crypto goes to 70, or like the value of your $100 crypto goes to $70, then, and I'm oversimplifying here, then you might get automatically sold out. And that's what I expected happened here. We started having some new money leverage get into cryptocurrencies to start really giving us that push right between 50,000 and 52,000. This is where we started really getting the push. Oh, it's 53,000. Wow, we're doing great again. We're doing great. All right, let's go over here. Look at the Weeble. Watch this. Here we are. We're on BTC. Let's go to the hour chart. Here's our crash right here. Look at this. This right here, coming off of the 46,500 line, a lot of this could have been leverage. Leverage. Boom. We're plowing in. Leverage. These extra peaks here. Leverage. Get in. And all of a sudden, look at what it took. It took a little bit of potentially a whale selling over here, which is kind of crazy to think. You get a whale selling right here at like 2 a.m. All of a sudden, notices go out. Hey, you need to pay up by 8 a.m. or something to that effect. And all of a sudden, we get to that 8 o'clock hour. You go to the minute chart. Look at this. It's crazy. You go to the minute chart. There it is. And you zoom into this. You can clearly see right here at 8:06. Boom, 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 boom. 5 minutes of HE double hockey sticks in the crypto market. And this, in my opinion, well, we know it's not just my opinion based on the chart. This is the 30-minute period of time where we had massive liquidations in the billions of dollars of liquidations. And so now what does that mean? Well, it actually means a good thing. We've now cleansed the system of some leverage that honestly probably was responsible for pumping crypto to the price that we've seen more recently here. Let's go to the hour chart. It's a little bit simpler to view. So we go to the hour chart here. In my opinion, this section right here could have been heavily leveraged, potentially because traders were expecting us to go to the $54,000 line. Well, once we got those liquidations, we quickly reverted right back to where we were before having leverage. It's also worth noting that when Bloomberg reported, hey, there's pretty low leverage in cryptocurrencies right now, that was about a month ago. So let's zoom out to about a month ago, which would be about the beginning of August. Beginning of August right here, look at that, folks. Same pricing, $44,000 to $46,000. That's pretty crazy. So these are important things, in my opinion, to know, is that this sell-off that we had was not something fundamental. It wasn't something that said, oh my gosh, Bitcoin's bad. El Salvador with the $27 billion GDP, big frickin' deal. 1/9 of the market value we lost in crypto today. Just the market value of what we lost today, right? $27 billion relative to the United States. That's like, gosh, I can't even do that math. That's 10, 100, that's 1,000. We're 1,000 times the size of their economy. America, that is. The United States, about. We're in the $21-22 trillion GDP range. They're at 27 billion. It's tiny, right? 10 times, 100 times, 1,000 times gets you to around that 27. So roughly, okay, maybe like 800x. But when you compare it like that, who cares about El Salvador's botched rollout of crypto? It doesn't freaking matter. What happened here is we had a leverage push and a liquidation event because people got a little too antsy, probably institutions. I don't think a lot of this was individuals. Maybe it could have been. People got a little too excited that that's it. This is the crypto bull run. And all of a sudden we get this instantaneous almost reversal here thanks to liquidations. Nope, no. Now, this is a lesson. Stay away from debt. But look at this. We immediately went right back to crypto technicals. Look at how this oscillated between our channel here. I have a channel drawn at 46,700, 47,165. I have not modified these channels probably in 3 or 4 months. The fact that the vast majority of the price action happened within that channel shows you crypto is all about TA and the technicals. And it's very, very possible that we had institutions concerned about CPI and the CPI data release coming up. Institutions were also off over the weekend. These commercial institutions, sure, their algorithms might be trading over the weekend, but I personally don't believe the institutions are coming in over a weekend like, oh yeah, let's go, you know, work on some new TA for selling our crypto. It makes sense to me that institutions potentially sold in the morning hours here and started this downtrend. We really started seeing this downtrend. Go again to the hour chart over here. Look at the hour chart. When we started seeing the downtrend. 5 a.m. Eastern time. This is right around the time you get a lot of traders on East Coast waking up, East Coast stockbrokers, hedge funds getting ready. Then you're midday over here, you see this sell down, and you get the big liquidations at 8 a.m. California time, start a business day after holiday weekend, middle, right before lunch on essentially a Monday of a week on East Coast time frame. Makes sense to me. This was trader driven. Maybe, who knows, it could have slightly been buy the rumor, sell the news. I really don't expect that. I think this was more CPI prep because I personally believe that the CPI is going to miss big. And we know that at least 48% of you who watch this channel and follow me on Twitter are investing in crypto as an inflation hedge. And if CPI comes in low, even though we might not believe the CPI, it's possible that institutions are trying to pre-trade this. Now, where do we go from here? And this is the important thing. Where do we go from here? Well, based on Bloomberg, Bloomberg has a support line drawn at 43,900. Now, I don't have a support line drawn there. That's right here. So I'm going to go zoom out a little bit and see if I can try to figure out what they're seeing at 43,900. It's about right here. Okay, I could see that. See, that's the bottom that we have right here in August. We've touched a few times. It's a top we had at the beginning of August. You go a little bit further. It's been a bottom before over here in February. So we have seen some precedent for a 43,900. Bloomberg is suggesting right now that we could see a reversal of crypto to 43,900. That is Bitcoin. I personally am excited to buy the dip. Oh, look at this. We just had another drawdown here. Yeah, look at this. This just happened as I was filming here. That's funny. Yeah, I've been filming. We've been working on this, or I've been working on this for like the last 30 minutes or so. We just had another little sell down here. Very interesting. We've now broken out of the channel. I personally find these buy the dip opportunities. I'm not buying super heavy though, because I am a little bit nervous about that CPI release. And if we get a cryptocurrency run between now and September 14th, I might be tempted to sell right before, like minutes before that CPI reading comes out on the 14th, which would be at 5:30 a.m. California time, so like 5:29. It's a potential temptation that I have. So if you've got money at a place where it's going to be expensive for you to sell, like BlockFi or whatever, and you want to transfer it over to something else, maybe consider doing that sooner. But anyway, these are some thoughts that I have. Long run though, very bullish. 20% Bitcoin, somewhere around 40% Ethereum, 40% Cardano. These are the big three that I'm investing in. Excited about those. I did open a position in HUT 8 today, and if we get a little bit more of a drop in Bitcoin prices and HUT 8 comes under some more pressure, happy to add to the position. These are just some of my thoughts on Bitcoin's pricing, what actually happened today, liquidation event and potential preparation for CPI data release, and what Bloomberg's kind of suggesting might be a little bit of a short-term selling season that we have coming up, and for me, buying the dip opportunity. So anyway, thanks for watching. Check out the programs linked down below for all my buy-sell alerts. Make sure to get your life insurance by going to metkevin.com/life, and folks, see you in the next video. Thanks for watching. Bye.